Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 5th, 2012. Lots to talk about, so let's get started. I kind of wanted to bring up some stocks that I mentioned in previous videos. Again, I am testing these pink mathematically calculated lines here. We all know that if you've been following my previous videos that these gray lines here hold up pretty well, but I kind of wanted to see if I could get a better mathematical calculation that'll give me a little bit more accuracy, and or if both mathematical calculations come close within each other, or one on top of the other, then that should solidify a more of a stronger either support or resistance line. So, right now I'm still kind of testing it. It's not as mature as these gray lines here, but what I am finding is that it's holding up pretty well so far. So, anyways, this is a chart of the SPY, which is the ETF that tracks the S&P 500, and recently we've just went right into this 137.09 level, which is this mathematically calculated level. I did say in the previous videos that this would be pretty strong resistance here, because we had this gap here, and then we had this pivot point here, which would give pretty good resistance. We did close above it though, however, yesterday, which not yesterday but the day before 4th of July, on low volume. And I did state in the previous videos that with low volume and a big push up, it's probably going to be a head fake, and that's what it turned out to be. Today we had a down move here on the SPY, creating this doji candle, but keep in mind, all right, we are still in the week of 4th of July. I mean, 4th of July has passed us, but people are still in the hangover mode and people are still on vacation, which means volume is still going to continue to be low. I mean, can you guess today's volume was only 126 million? Our average is 150 million. I mean, it's just it's low volume. It's going to be hard to short the market in a low volume state. So basically, in essence, like I said in previous videos, if I start hitting resistance levels either tomorrow or Monday, then I'll consider definitely taking a short for the pullback. Okay, so let's take a look at what happened today. Today we went up. We actually cleared the day before yesterday's candle, which was I guess you could call 4th of July Eve kind of thing. But then towards the end of the day, we sold off, and this 137.09 level actually held off. I also said that we needed a close above this candle here to confirm the breakout of this 137.09 level. We did not get that confirmation. We actually hit it a little bit lower today, and don't let this fool you. Yes, this is a doji candle, and so is this a doji candle, but you have to keep in mind that, does this constitute a reversal? No. Why? Because again, the volume is too low to take a short. We need to follow, or I should say, I need to follow my rules. Sometimes I break my rules, and whenever I break my rules, I end up losing money, and that's just the bottom line. Anyways, let's take a quick look at this. We have higher volume here, which would indicate exhaustion volume, as this previous day's volume here, but just keep in mind, this is kind of not really a trick, but then you just have to realize that the day before 4th of July, the markets were only open half a day, which is why the volume was so low. I think this was about 80 million shares traded this day. Okay, so keep in mind this. So we have to look at the previous day's candle, and let's kind of just zoom in here. So this was today's volume here, and this was the another day's volume here. We cannot look at this volume because this was half a day. As you can see, the volume was still lower than that day's volume. It wasn't by much, but it was still lower. And what I want to see in an exhaustion volume candle is a candle that's pretty substantially high, possibly even higher than the highest candle back here. I mean, if we actually closed today up here, then I would have guaranteed taking a short with hands down. There's no question about it. I would have taken a short trade based off of this doji candle and this 137.09 level. Now, here's the thing: what could happen tomorrow? Well, being that we are still in a low volume week, and possibly Monday will still continue to be low volume, because Mondays and Fridays are normally in low volume anyway, there is a possibility that we may still float higher into this 138.95 level, and you have to keep that in mind. I mean, I have to tell you, I had itchy fingers today, and I really wanted to short some stocks today at this level of the SPY. I mean, showing a little bit weakness, and this is a harami pattern here. I really don't play harami patterns, but this is a harami pattern, and there is a chance that we may actually start turning over. But again, rules are rules. I have to follow my rules. If I miss a trade, I miss a trade, right? So in any case, if we get into this 138.95 level on Monday, then I'll pretty much be taking a short. Again, like I said in previous videos, it's all about the timing. It's not only price. I mean, price looks good, the candle pattern looks good, the resistance points look good, but the timing just isn't right. I mean, if this actually happened, if this doji candle was created on Friday, then I'll probably take a short. But because today is still Thursday, I'm still gonna have to hold out, because tomorrow we may actually float up depends on how much volume we get tomorrow. Once the volume starts coming back in the markets, however, I expect the markets to sell off. Okay. All right, this is a chart of the UUP, which is the US dollar, and I'm switching between the UUP and the DX. It depends on which one is giving me a better pattern. So we have this point here. I think I deleted that line. We still have this 2216 level here that's still in play. Okay, so I said in the previous video we had this trend line here. We broken down, but we did not confirm because we did not close below this candle here. Okay, and then we started riding this 50 moving average, and then we just completely broke higher just like that. Okay, so the dollar, because the dollar had closed above the gap window point here, and because we closed all the way up above here, there is a possibility that this dollar is showing strength. Now we could consolidate first before going higher. I mean, there is definitely a possibility that we could actually go right back into this trend line before jumping higher again. So that would mean that we would have some slight upside still in the markets before heading down. Again, the US dollar is opposite of the markets, dollar up, market down, and vice versa. It's very similar to the VIX. Okay, so something to keep an eye on is the dollar. We had a huge pop. It didn't drop the markets as much, and that's because the dollar is not a one-for-one with the markets. But tick for tick, it is the same as the markets. Meaning, if we get a tick up in the dollar, the market should get a tick down. But as far as price goes, it's not a one-for-one. Okay, but you still need to keep an eye on the dollar because we're still gonna get. We are still right now in pretty good resistance. We're gonna have another resistance point here, as well as another resistance point here. So what does that mean? If we don't get above this resistance point here and we start pulling back a little bit for another move up into this resistance point, then that simply means that the markets have some more upside to go. Okay, so let's look at some stocks. Oh, but before I do that, I know I mentioned that I should say more of this. The markets have the possibility of moving higher. Right now, what I see on the charts are telling me simply this. Let me show you. The charts are showing me a doji candle on low volume. This does not mean that the charts are ready to pull back. We are in pretty good resistance, but we did close above it the day before 4th of July. And that means that I am in a neutral standpoint as far as the SPY goes, a neutral standpoint. If I had to choose, I would actually short the market simply because I don't see much more upside in the SPY, to be honest. I mean, max to me, in my opinion, would be this 138.95. Okay. Alright, so I have a whole bunch of stocks that I want to talk about. Let's start from the top of my list, and that's Walmart. I've been talking about Walmart for a very, very long time. I've been waiting very, very patiently to short Walmart. I had this level here, which is at $70.56, and I explained to you guys why I didn't take the trade or the short trade at that level. Everything's about timing. Again, if Walmart can get into the 72.22 level either tomorrow or Monday, then I'll definitely be taking a short on Walmart. Okay, let me just move my alert a little bit higher here. Okay, so that's for Walmart. We have this calculated level here. I do not have the percentage calculated levels around this level because I haven't done the percentage calculation level. Maybe I'll do that for Walmart later on today. But we do have this trend line up here, and we do have this level here. So we will be, if we do get here within the next day or two, we will be overextended. Overbought, not just yet, but definitely overextended, and another pullback is probably in the works. Okay. Alright, this is a chart of SINA. Let me load my drawings here. Alright, SINA, we have these calculated levels here. Of course, again, the pink ones are percentage, and the gray ones are actual hard numbers. Okay, hard numbers that are taken from actual patterns within the chart itself. I don't really necessarily like SINA until it gets into the 60.94 level, if it even gets there. I highly doubt it gets there because that's pretty high, but if it somehow can find its way up there and the 200 moving average can come in, then that's definitely a trade that I'll be interested in. This is a weekly chart of SINA, and again, your weekly charts are something that you want to pay attention to because patterns will fail in your daily if your weekly is showing the opposite. And right now in the 60.94 level is a pretty good resistance point for SINA, SINA. 20 moving averages over here. We have this down sloping trend line, so that $60.94 level looks pretty good to me if it can even get there. I doubt it, but if it somehow does, I'll get alerted and I'll probably take a short trade on SINA. Okay. This is a chart of SCCO, or Southern Copper. This isn't this isn't something that I'll necessarily take a trade on simply because the volume is still low, and the stock is gaining some strength, but it is still in a downtrend. Okay, I just kind of wanted to show you. If you look in my previous videos on SCCO, you'll see that this pink and this gray mathematically calculated level, when it's close together like this, or one on top of each other, it serves pretty strong, and that's why I created another mathematical or I tried to introduce another mathematical calculation, simply because I needed a little bit more validity, or I needed to validate this gray mathematically calculated level a little bit better. And as you can see, it's working out pretty well. This 3240 level, SCCO went right into it twice and closed right under this 3212 level, which was the gray level, which is, and then to me that's pretty interesting how that worked. It actually went into this 3240 twice, and it closed twice right under this 3212. So this isn't something that I'm looking necessarily to take a trade on, but I just wanted to show you how these mathematical calculations work and how accurate it can sometimes be. Okay, obviously nothing's 100%. These calculations do fail when there's big news or earnings or stuff like that, but so far it's been pretty good. Okay, this is a chart of RAX, RAX, rack space. All right, let me load my drawings here. We have these two mathematically calculated levels pretty close together over here. However, this is going to be my first resistance point. My second resistance point will be at this 49.14 level. Why? All right, so would I take a short trade here? If on Monday we reach this 46.72 level, which would be a lot more probable, then yeah, maybe I'll take a short level on RAX. But if somehow some way we can get into this 49.14 level, then that'd just be a sweet trade, and I'll show you why. We have this mathematically calculated level based on percentage. We also have this 382 Fibonacci retracement line, and we have this 50 moving average, giving us three indications that there could be a possible pullback for RAX at this 49.14 level. Okay. Now here's another thing. I highly doubt it gets here, but if somehow it gets to this 5201 level, this is the weekly chart, by the way. We have this 20 moving average here with this mathematically calculated level and the Fibonacci 0.25 level around this area too. But I really like RAX here, but RAX does look good when you have, again, two mathematically calculated levels close together like this. There's a good chance that we may get a bounce at that level. I'd have to look at the intraday to see if the intraday shows weakness before I take a swing short on this trade. If it gets to this level or around this level sometime tomorrow, or is best case scenario would be Monday. Okay, so let me put alert over there. All right, this is a daily chart of Nike and KE. Let me load my drawings here. Boom. Okay, so we have this 96.58 level, 382 Fibonacci retracement. We also have this gray line here, which is at 95.68. All right, around this area here is probably where I would like to take a swing short. We also have this gap fill, and hopefully this 20 moving average comes down at the same time. Okay. In addition to that, there's this 50 moving average just lingering right above on the weekly chart. So I'd say that this is probably going to catch my eye if we can reach that level anytime soon, or preferably on Monday. Okay. This is daily chart of Google. If you have, if you're brave enough to trade Google, I'm not, but I just want to bring up this chart here. Let me load this drawings. Okay, we are already in the 601.17 mathematically percentage-wise calculated level and this 598.10 level. Okay, we also have this 200 moving average, which it looks like it bounced off this 382 Fibonacci level. So pretty good. I mean, I have to say that this area here would be pretty good resistance. In addition to that, if we look at the volume was pretty substantially high. It wasn't anything extravagant. It was above average, and it would have been better if we could have closed above this this volume candle here. But that does show that Google does have a possibility of having a small pullback sometime as early as tomorrow. But again, the reason why I haven't taken any short trades today is simply because the volume is low, and it's hard to fight the volume when you're trying to short the market. Okay. This is daily chart of F5, and again, I just want to remind everybody that nothing that I'm saying now is a recommendation to buy or sell anything. This is simply my opinion. Okay, so this is a chart of F5. All right, I have two mathematically calculated levels here at 105.96, and a little bit below that. Let's take a look at the weekly. At this level here, we have the 50 moving average on the weekly, which is giving me a pretty good support level. The pattern is also showing a bearish consolidation pattern. So if we can come down, so we've already come down, if we can come up into the 50 moving average and these two price points here, then I do expect F5 to at least hit either double bottom here, or we're gonna get some minor support at this 200 moving average. We may actually get a bounce off this 200 moving average. In fact, if I do decide to take a short on F5, I would take half off the table at this 200 moving average and let it bleed out all the way to the double bottom, where I take the remaining of my trades off the table. Okay. All right, like I mentioned in the previous videos, this is probably my favorite one. Actually, I should say one of my favorite ones, but this is something that I'm definitely keeping my eye on. Let me load my drawings here. All right, so we have this 36.35, we have this 36.06 level, all in the same area here. We also have I thought we had a fib level, but I guess not. So I should take the fib level out. No, I'm leaving it in. Okay, this is the reason. FCX should have some resistance around this area, but definitely we'll get some resistance around here at the 200 moving average, the 382 Fibonacci retracement. Because it's so close to these two levels here, if we can break through it tomorrow, then I'll wait for this to hit on Monday, if that's even going to work. Because we've already went into this 36.06 level, we may actually already pull back because of this upper trend line here too, giving it extra resistance. So this 36.06 level, which is a pink line here, and the mathematically calculated by percentage, the high of this candle here, with the high of today, was $36 flat. So it's basically 6 cents off from being triggered on a short trade. Okay. Now, I will consider taking a short trade at the 36.35 level here. I actually have an order in that if it does hit that level, then I'm going to sell. Okay. But it really depends on the intraday to see how strong it is. If it's very strong, if the FCX turns out to be super strong and we get super low volume, then I'll wait for this 38.01 level. Okay, so we have somewhat of a tail up here, which kind of looks like somewhat of a shooting star. I mean, it would have been much better if the body of the candle was a little bit smaller. And it's something especially that I wanted to bring to your attention. I really like the volume here. The volume is higher than the previous days. I mean, this way more than 3 days, 1 2 3 4 5 6 7 days. Okay, higher than 7 days ago, which is telling me that this could be an exhaustion candle. In addition to that, we are in a downtrend. This is a confirmed downtrend on the FCX, which means that we would be trading with the trend. Again, the trend is your friend. You don't want to trade against the trend. The only thing that's going against me for tomorrow, which is the only reason why I didn't take the short trade just yet, is because it's a low volume. It's very hard to fight the low volume. So tomorrow, if we can get into this 36.35 level, or somehow we pop into this 38.01 level, I'm definitely taking a short trade, short swing trade on the FCX. Okay, so this is something that I'm thinking about doing. Definitely something that's just my opinion. Again, these mathematically calculated levels aren't guaranteed, but you know what, they seem to be working out so far. I mean, if we kind of zoom in here, let's take a look at the intraday chart. Okay, this is the intraday chart. It's a 10-minute chart for each candle. If this is the start of the day, this is the end of the day here. If you look, we went almost right into this 36.06 level. We missed it by 6 cents before it started pulling back. Okay, so these mathematically calculated levels seem to be holding up pretty well. Okay, this is a chart of Costco. This is a chart that I was mentioning a long time, that I mentioned in my previous videos. I had this $95.14 level. It went right into this 95.14, pulled back, and since then it's just continued down on its merry way. All right, so these, even the gray lines are pretty accurate, but introducing the pink lines will hopefully make me a little bit more accurate as far as being more consistent in accuracy. Okay, I just wanted to show you this stock. This is too late, in my opinion, to chase. I mean, if I was to jump on the short side, I do expect it to at least have some support over here. By the time it gets there, this 20 moving average should be there, and we should get another bounce before coming down even further. However, you just never know. We might just get a pop higher because Costco is a stock in strength, and again, you want to go long those strong stocks and you want to go short the weak stocks. Okay, I mean, it just doesn't make sense to go short on a strong stock like this, because if we catch a bid in the markets, I mean, these guys are going to be leaders and it's going to pop right through. If you get into a weak stock and the market catches a bid, then you won't get hurt as bad. Okay, this is a chart of BHP. Let me load my drawings here. Alright, so we have a level here at $70.52. As you can see, the gray and the pink are very close together. We also have a pivot top here, and the 200 moving average is not too far away. So if we somehow can get into the $70.52 level, then I'll be thinking about taking a short trade on BHP. Okay. Alright, this is chart of Bed Bath & Beyond. Let me load my drawings here. And then we have a level here at $66.35 and $65.01, which is the gray line. They're both great resistance points, but I probably won't be liking it until it gets around the $66.35 level. If we look at the weekly chart on BBBY, we also see that the 66.35 level is coincides right with this 20 moving average here, which will give it pretty good support and resistance. In addition to that, I drew this bottom trend line here in the weekly, and I said in my previous videos, if we get any close or a breakdown of this trend line, then I think BBB is on its way down. So we'll have support there, and we'll have some support here. Definitely a lot of support at this 200 moving average and this pivot point. But we have to be able to break down first. I want to catch it at the top and see if we can come in a little bit lower. But we'll see. I'll keep my eye on this. I have my alert here for 66.21 and this BBBY. Alright, this is chart of Amazon. Let me load my drawings on Amazon. Okay, so again, this 229.75 was a mathematically calculated level based on percentage. It didn't reach the 231.61, and this is what I mean by trying to be a little bit more accurate. These two levels were around the same. However, it went right into this 229.75 and then is now pulling back. Actually, it went in twice and then is now pulling back. Will it continue down? That's the question. It doesn't really matter. What matters is that this was pretty good support. We'll probably get some more support at this 20 moving average here, and we may actually get a pop into this 239.11 level, which is where I would actually take a short. And the reason why I'm going to wait, or I should wait, or normally I wait and I take the next level higher on stocks like these is because, again, this is a stock in relative strength. I mean, this is one of the stronger stocks. I want to be very careful. I want to try and catch it on the top. And so taking the trade now wouldn't have made sense because the stock is so strong and we're in light volume this week. So I would have to wait till the 239.11 level gets hit, if it even gets there. If it doesn't get there, not a big deal. There's hundreds of other stocks to choose from. I just wanted to show you Amazon here, just in case anybody was interested of what I thought of AMZN and how I would trade it. Okay. This is a daily chart of ABX, and I talked about this in the previous videos. Let me load my drawings here, and you'll see that when these two mathematically calculated levels come close together, and we also had these two moving averages, we closed above. Okay, the day before 4th of July on low volume, and I said, well, this might be a head fake. We also have this downsloping trend line. This gives a whole bunch of indications that this thing could reverse, and today, sure enough, we did. It looks like we're coming back down. But again, in low volume conditions, I just don't want to take the chance, and I'll wait till either Friday or Monday to take any type of swing short trades. Okay. All right. Last but not least, this is a daily chart of Apple. Okay, I've been talking about Apple for quite a while now. So I said the 649 level will get hit, we'll get a pullback. We actually got a pullback off the 649 level intraday, and I said your next level, which would be the percentage level, which would be 612.34. And check this out, it actually went into 612.34 and then pulled right back in. You see, it went right into it, pierced a little bit, and came right back in. We actually closed right on top of the upper trend line here. So will Apple pull back? That is the question. Will I take a short trade on Apple? I mean, it does have this down move, and then now it has this bearish consolidation pattern. But in this low volume, that's tough, right? And especially Apple, which is one of the ones in strength. I mean, if the market catches any type of a bid, if the Qs catch any type of a bid, I mean, this Apple stock in a weak market today went up over $12 earlier. You just never know what Apple is going to do. So, in my opinion, I didn't take the short trade on Apple at 612.34 simply because tomorrow should still be a lower volume day. Does that mean that the markets won't sell off tomorrow? No, it doesn't mean that it won't. It just means that you have to give an upside bias when you have lower volume. And if the expectation is you have lower volume, then you shouldn't be thinking about shorting. Okay, now if there's stocks that are in support and you want to go long in a downtrending market, then that's going to be a counter trend trade, but at least you'll have the low volume on your side. All right. Anyways, I'm definitely out of time here. This was a 7-minute market update. God bless to you all. Good luck to your trading, and hope to see you in the next video.